Hello everyone, it's Wednesday, November 12th. Today we will analyze the charts of the euro and British pound to assess potential market movements. Yesterday the euro strengthened despite disappointing economic data from Germany, which came in much weaker than expected. Statistics from the broader euro area helped offset the pressure on the euro. This allowed buyers to drive the price up to a new one-week high, maintaining the potential for continued bullish momentum. News that the US government shutdown may end as early as Wednesday provided an additional boost to the euro. It is important to note that today, the House of Representatives is scheduled to vote on the budget legislation aimed at halting the shutdown. Almost all economists anticipate that the bill will pass and be signed by President Donald Trump, promptly resuming government operations. Following these, timely economic data will be released, assisting traders in evaluating the Federal Reserve's future monetary policy plans. Looking at today's macroeconomic calendar, we have German consumer price data for October, expected to remain at 0.3% in line with preliminary estimates. Notably, German inflation has been trading upward since August, with gains of 0.1% in August, 0.2% in September, and a projected 0.3% for October. On an annual basis, Germany's CPI is forecasted to be 2.3% in October, close to the European Central Bank's target level, so this indicator is unlikely to significantly impact the euro. Traders will also pay attention to the Eurogroup meeting, where several ECB's officials are scheduled to speak. Meanwhile, Italy is set to release data on industrial production, but since this reflects September's performance, it is unlikely to have a major impact on market sentiment. As for US statistics, the calendar is light. However, statements from several Fed policymakers, including John Williams, Christopher Waller, and Raphael Bostic, will be closely monitored. It is worth noting that the ongoing government shutdown, now in its 42nd day, has left markets without crucial fundamental statistical information, particularly regarding the US jobs market. Against this background, Fed officials have opted to take a more cautious stance. Currently, the odds of the US Central Bank cutting interest rates at its December meeting are approximately 70%. Thus, much depends on policymakers' remarks, as traders will likely seek hints about the regulator's future actions. Turning to technical analysis, the 1-hour EUR USD chart indicates that a decline followed by a false breakout at 1570 would generate a buy signal, with the euro potentially recovering to 1604. A break and consolidation above this level would lead to a rise to 1636, likely paving the way for further gains toward 1.1668. At this level, I would recommend it going short on the rebound, targeting an intraday correction of 30-35 pips. Short entries at 1604 and 1636 should be considered on a false breakout. In the event of muted buying activity around 1570, the euro would likely return to 1543. A false breakout at this level could present a buying opportunity. If the euro falls further, long positions could be considered at 1521 on a rebound, aiming for a 20-25 pip move. As for the British pound, the trading setup is similar. The GBP USD pair remains range-bound. A false breakout at 31.51, the midpoint of the sideways range, would trigger a sell signal, dragging sterling down to 31.16. If the price breaks below this level, the path would open toward 30.86 and even 1.3052, where it would make sense to go long on a rebound in anticipation of a 30-35 pip move. Long entries at 31.16, the lower boundary of the range, and 30.86 would be relevant after false breakout. The targets will be 31.51 and 31.81, the midpoint and upper boundary of the sideways range, respectively. A false breakout at 31.81 would generate a strong sell signal. Short entries on the rebound would be attractive at 1.3216, targeting an intraday correction of 25-30 pips. Best of luck.